Nvidia. If it were a person, I'd hate to be this person because expectations are just so high and it's hard to live up to.
Martin, thanks for having me here. Yes, you're right. They are doing very well in terms of earnings, but as you mentioned, growth is slowing down. Slowing down, though, Martin, from staggering numbers, more than 200% growth to now maybe 100% growth. I wish we were all that lucky. So I would say it's very emblematic of the earnings season that we've seen so far. Earnings seasons has been much better than expected in the US. Going into the season, growth expectations were in middle digits, about 4 or 5%, and it's coming in closer to 8%. So, from my seat, it's still very good earnings in the US.
Still very good earnings, but these were the set of numbers that everybody had been waiting for probably more than a week now. I mean, the Fed is still probably, a couple of weeks away, and aside from, let's say, Ukraine, Russia, and who's going to be the next Treasury Secretary, it is Nvidia that everybody had been focused on and saying that, look, this is what's going to either make or break the market. And I say this because post-election, it had been about the small caps, it had been about the financials, but recently, in just the last couple of days, the Mag 7, including Nvidia, have come back into play. So with numbers like this, and the stock is, yes, trading down 1%, maybe not as much as some people have been expecting. They've been expecting pretty wild stock reactions and significant stock reactions one way or the other. Is this enough to break the market?
I don't think so. I think stepping back a little bit, if we look at not just this quarter, then Martin, stepping back for the entire year, beginning of the year, market was really worried about concentration in the Mag 7. And initially in the year, indeed, we saw most of the returns coming from these sectors and these names. But all through the year, market breadth has been improving. In other words, we are seeing earnings participation from all the sectors and not just the tech sector. And we are seeing stocks rise across all sorts of sectors, not just these 7 names. And yet S&P 500 is up closer to 22% or so this year with participations from different sectors. So I don't think disappointment from 114% to 100% or so growth is going to break the market. Market breadth improvement is actually really good for the health of the market because you do want other sectors to participate.